Welcome to Bloomberg Markets. I'm Scarlett Fu. We're about halfway through the U.S. trading day, and you look at the big cap stocks, the S&P 500, it was higher for a second day, but those gains have started to fade, and you can see the NASDAQ 100 now in decline mode before you have two of the magnificent seven names reporting, Tesla and Alphabet, this afternoon after the market closes. Small caps, though, holding up pretty well, still clinging on to a gain of 0.8%, showing there's still some momentum behind that rotation trade into the smaller companies. Treasuries are higher across the curve. The two-year yield coming down by 2 basis points or so, pushing yields lower before a $69 billion auction of two-year notes in 30 minutes. Now, let's highlight some individual movers for you. We have UPS falling the most ever after reporting a lower than expected profit last quarter. The package delivery company is suffering from wage inflation and weakened demand following a pandemic-driven boom in e-commerce deliveries. The silver lining, though, is while profit fell, UPS's volume grew for the first time in 9 quarters. Spotify rallying as much as 16%. The audio streamer reported quarterly subscriber growth of 12% that topped analyst estimates. The beat follows moves to cut costs, reduce its workforce, and pull back on podcast production. And the SEC approved the first ETFs investing directly in Ether, the second largest cryptocurrency. This decision highlights a relaxing of the regulatory climate for the digital asset sector. So let's explore that more as the new products begin trading today. I'm pleased to welcome back Sui Chung. He is CEO of CF Benchmarks, which is a subsidiary of Kraken and provides data to 6 of 11 Ether ETF applicants. Sui, it is good to speak with you, and thank you so much for joining us again. From where I sit, it feels like there was a lot less drama, a lot less regulatory drama surrounding the approval of these Ether ETFs. Do you see that as well?
Yes, Scholar, thank you very much for having me. I would agree with you. There's a lot less drama. It's certainly less, it's been less covered by the media in the lead up to the launch. And that's in large part because we had the bar that the SEC had set with the Bitcoin launches, that had become very clear, and it was very clear that Ether had crossed that bar, as we demonstrated in our comment letter to the SEC, which indeed the SEC quoted pretty extensively in their approval order.
So let's talk about demand in the near term and down the road. Who specifically do you see driving demand for Ether ETFs in the first few days of trading? Because we mentioned those spot Bitcoin ETFs. I would have thought that the crypto curious were, kind of fulfilled after the launch of those products.
That's a very good point, Scholar. So I think initially you tend to see self-directed accounts, individual investors investing into them, and from the flows we've seen in the first half day of trading, in excess of $500 million across all of the instruments. That's pretty strong. Every single one has crossed $1 million. So everyone has beaten the average ETF launch volume on the first day already. Now, in terms of the crypto curious, I'd say that yes, you would have thought that their appetite would be sated by the launch of Bitcoin. However, you've got to remember that Ether is fundamentally a very different asset. It is to Bitcoin, it is a industrial asset. In fact, it is the native currency of the world's largest smart contract enabled fee generating decentralized blockchain platform, one that we see major corporations already hosting applications on and holding that Ether to pay the gas fees to enable their products to operate on the Ethereum network.
So there are people or institutions that have direct exposure to Ether. What is the benefit to owning Ether in an ETF wrapper rather than the underlying asset itself, which includes staking, and we know the Ether ETF doesn't?
Yeah, that's a good question, because the staking issue has been on everyone's mind. But let's just step back and think about what difference the staking actually makes. Right now, the CF Ether staking reward rate, the benchmark rate for tracking Ether rewards is tracking at around 3%. And now this is an asset that trades, with volatility in excess of 100. So that 3% reward is a bit of a rounding error, really. So we don't think that it will impact flows very much initially. But that's not to say it's not an important feature for Ethereum and holding Ether. And so we do anticipate that the SEC in time will allow these products to, and will allow future products to stake that Ether.
Oh, okay. So that's something to look ahead to. I got to ask you as well about the political climate. I know that the crypto industry has been very excited, or is very excited, about a possible second Trump term because of the former president's support for crypto overall. Is this justified? Are you, for instance, optimistic? And what specifically would you be looking for from a more crypto-friendly president?
I think that the way I see it from across the pond over here in Europe is that it's not so much each candidate and what their views on crypto are. The most important sea change we've seen is that crypto is on the agenda of political candidates. Political candidates need to have a view on crypto, and increasingly that view, whether it be from the Democrats' side or the Republican side, is that it is a progressive force for innovation and potential economic growth generation. And that, I think, is the most important change that we'll see, regardless of who wins. I think that will become the sort of mood music around crypto going forward from the political classes.
All right, appreciate the view from across the pond there. Sui Chung is the CEO of CF Benchmarks. Thank you so much for joining us. We mentioned politics, of course, so let's keep an eye on the developments taking place in Washington. Ronald Rowe has been named acting director of the Secret Service, and this is after Kimberly Cheatle stepped down. She is taking responsibility for security failures at a campaign rally where the former president, Donald Trump, was shot. Bloomberg's Mike Shepard joins us now to discuss. Mike, of course, Kimberly Cheatle was in the hot seat yesterday, testifying before the House Oversight Committee. Kind of surprising that she took this long to step down, given the calls for her to step down yesterday from both sides of the aisle.
Well, based on what we saw yesterday, she wanted to present her view and her version of events before making any decision about whether she would stay at the agency. But as was raised during the hearing, her departure was written in the stars. After the 1981 attempted assassination of Ronald Reagan, it was pointed out during the hearing, the then director of the Secret Service also resigned. And that is the kind of reminder to her of the stakes, and a reminder to all of us of the stakes. And the shooting of Donald Trump and 3 rally goers on July 13th stands as the biggest lapse in security since the attempt on Reagan's life more than 40 years ago.
So what's the next step for her replacement? Because my understanding was these were presidential appointments, no?
Well, that's right. And Rowe steps in as acting director. And Rowe is inheriting an agency. He's a 25-year veteran of the Secret Service, but he is inheriting an agency that's in turmoil right now, following the attempt on Trump's life and all the scrutiny that will come. There are multiple investigations underway now in Congress, in both chambers, by the agency itself, and there's a broader inquiry that President Joe Biden has called for as well. And there will need to be immediate measures to make sure that candidates, including former President Trump and Vice President Harris, have adequate protection as they are out on the campaign trail. But then there will be a deeper look at the agency's mission and the degree to which it's coordinating with local law enforcement agencies on these big events.
A deeper look into the mission, but also some pragmatic questions about funding as well. Is this going to jeopardize federal funding for the Secret Service?
Well, if anything, the inquiries may expose that perhaps the agency hadn't received the support from the federal budget that it needed to be able to fulfill its mission. And that will be one of the things that we see play out. And it is a bipartisan issue. We saw both Republicans and Democrats really laying into Cheatle during the hearing yesterday. It was a bipartisan wave calling for her to resign and also demanding answers about the failures. Because this is not just about Donald Trump. It's really about any national level public figure who is receiving protection from the agency who may be subject to some sort of lapse if the agency isn't doing its job or receiving adequate funding.
Yeah, what struck me in her testimony yesterday was that she wasn't able to answer a lot of specific questions. She came off as very evasive. Is that because she simply didn't know the answers, or is it a matter of national security that she can't disclose that in a public hearing?
Well, it may be a little bit of both there, Scarlett, and that was something that struck many of us who were watching the hearing, that we expected a little bit more information on key details, including how was the shooter, Thomas Crooks, able to climb upon the roof from where he fired the shots that injured the president, killed a rally goer, and injured 2 other attendees at this event. And other questions as well about if people were aware of his presence on the roof, why did law enforcement not act, including the Secret Service, not act more quickly to either shut the rally down, protect the president, or intervene in some fashion more quickly?
Yeah, it definitely reinforces the idea of the Secret Service as kind of reactive and passive as opposed to proactive. Mike, really appreciate your joining us today. Mike Shepard giving us more context here on Kimberly Cheeto resigning as the director of the Secret Service following the assassination attempt on Donald Trump last weekend. Now coming up, Coca-Cola raises its full-year outlook as well as its prices. We've got details on the latest earnings and how inflation is affecting its business. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour. We're looking at Coca-Cola because its second quarter earnings beat analyst estimates this morning. The beverage company boosted its full year outlook as it continues to raise prices worldwide, with the drinks costing 11% more in North America this year. The stock is up today. It's up by 0.8%. So when you look at it over a year-to-date basis, that is almost an 11% gain. Barclays Analyst Lauren Lieberman joins me now with more. Lauren, good to speak with you. Thanks for joining us here.
Thanks.
So higher prices helped boost revenue. Talk us through which of its products. It's got sports drinks, it's got fruit juices, it's got bottled water, and of course soda. Does Coca-Cola have the most pricing power on right now?
So in general, I'd say they have the most pricing power on soft drinks, as you might expect. But also it's important to know that of that big pricing benefit that the company showed on a total company level, a good chunk of that was because of pricing in hyperinflationary markets. So Argentina would be top of the list. Even when you look down at the North America level, about half of the price mix that was reported is just the portfolio mix. So things like Fairlife milk, which they own, grew faster than things that are lower price points. So that influenced the balance. But to answer your question directly, soft drinks is where they have the most pricing power.
Okay, soft drinks is where they have the most pricing power. At what point do consumers get fatigued by that? We've seen a lot of prices go up, and at some point people will just rebel and not buy soft drinks, which is not an essential.
Yeah, absolutely. And it's also something that the company is very aware of. They say themselves, like, it's a lot harder to bring someone back into soft drinks, so we'd rather invest now to make sure we don't lose them. So what Coke is doing at both ends, so it's at the sort of affordability end, they do things. So in emerging markets, it's refillable packages that are more affordable to the consumer. And at the high end, there's still lots of people that want to buy small little curvy bottles of glass Coke to serve at a dinner party. So they play both sides of that. In the U.S., definitely seeing some fatigue, as you're in many categories, from the consumer and the lower income consumer in particular.
Yeah, that's always a question, right? How much more can it keep raising prices? Has it really topped out? I compare Coca-Cola with Pepsi, and we know that PepsiCo, which you also cover, reported weaker than expected revenue growth, in large part due to weakness in its snacks business. What is Coca-Cola doing better than Pepsi when it comes to the beverage business?
So in beverages in particular.
Yeah.
So in beverages in particular, I mean, Coke's made Coke cool again, I think, is actually the candid way of saying it. All the investments they've been making in the brand and in Coke Zero, making it more permissible, being very, I guess, leading the marketplace in terms of package size. So the bottles I mentioned, the small cans, things like that. But then investing in the brand. So aligning Coke brand with music, with sports, with gaming, all those sorts of things. Pepsi hasn't really done the same or to the same degree of success with brand Pepsi, if we were just even to compare those two.
That's interesting. So you're saying the marketing is paying off in big ways for Coca-Cola. I know it's a big sponsor of the upcoming Olympics. In fact, I can't remember a time when it wasn't a sponsor of the Olympics. How does that show up in the financials? You mentioned certainly in revenue, but on the cost side, it does as well. Are we going to see a big bump up in costs for this quarter?
So the quarter just reported as they call it, direct marketing expenses were up mid-teens. So pretty similar to the run rate on sales growth, actually. And it's amazing because they showed really good operating leverage in the P&L, even with that level of marketing reinvestment. But I would say that year in, year out, Coke is spending at elevated levels. So it being an Olympic year maybe just changes the timing of when that spend shows up in the market rather than the absolute level. Okay. So it's not the Olympics, it's the World Cup. It's always a something.
Right. During the summer, there's always something to get behind, right?
Yeah.
Coca-Cola is truly a global company. It only gets 37% of its revenue from North America, 39% of its operating profit from North America. How much is the strong dollar a headwind here for Coca-Cola, since it relies on so much of its sales from overseas?
A lot. It hurts a lot. So just even you think about this year's earnings guidance, they're talking about, I think it's 5 to 6% reported EPS growth, but it's like 13 to 15%, quote unquote, currency neutral. So FX takes a big bite out of profitability for Coke.
Going forward, what is it that investors want to hear from Coca-Cola?
I think people want to own staples for safety, right? For defensive, especially right now. We've seen a bit more interest coming into the group. So it's predictability, and predictability starts with top line. So it's all about top line growth. It's about continued strong, steady balance between volume and price mix on revenue. That is the key. It's a global growth story.
And the dividend, of course, as part of the regular payouts.
I almost see that as of course, but yes, you're right.
As a given. In terms of the universe of companies that you cover, you look at these consumer packaged goods companies like Kimberly-Clark, Procter & Gamble, beverage companies like Coca-Cola and PepsiCo. Where does Coke stand out in your universe in terms of management and execution?
High on the list. I mean, it's the Coke system I frankly find fascinating. It took me a little bit to get my head around the idea of not managing your own route to market, distribution, marketing at the local level. But that separation of the two functions, it's more than two functions, but the two functions, if you will, it allows for execution and granularity that is unparalleled. And so when you think about a company's ability to react to how different market conditions can be, and economic and consumer by postcode, right? It's that granular. Coke is one of probably the only one that can do it.
Interesting. I mean, it's kind of a model for other companies if they had the scale to be able to achieve that.
Absolutely.
Lauren, thank you so much for joining us today.
Yeah, my pleasure.
Lauren Lieberman over at Barclays with her coverage on Coca-Cola. She has an overweight rating on the stock. Now coming up, Wiz turns down $23 billion from Google in order to pursue an IPO. We've got more of the momentum that we're seeing in initial public offerings. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. The U.S. IPO market heating up with up to $5.5 billion in first-time equity issued this week. That would be the busiest week for IPOs since last fall. And this comes as the cybersecurity startup Wiz has turned down a takeover bid of as much as $23 billion from Google. Bloomberg's Bailey Lipschultz has been reporting on all of this. Bailey, that is surprising because, $23 billion from Alphabet, it's a clean exit for that company.
Clean exit, almost doubled their last valuation when they did funding at a $12 billion valuation round, Scarlett. But it does seem like when you look through the statement that the CEO sent to employees, really the focus is on growing the business. We've seen them actually going out and acquiring companies, wanting to get towards $1 billion in ARR, which is revenue, on an annual basis, and then eyes eventually going to be set on an IPO, it seems like.
So let's talk about the IPO market, because not so long ago, it felt like a lot of companies were holding back on listing. StubHub most recently said it's going to wait until the fall.
Yeah.
And before that, Golden Goose, which I know has its main listing in Italy, also said it was holding off because of uncertain market conditions. And we could tie that to political uncertainty in Europe. But what is it that Wiz sees that some of these other companies don't?
I think the big thing when you look at a business like that, they're growing fast, they're growing really rapidly. So when you look at the expansion, they're growing both organically and inorganically. And Scarlett, I think the thing is when you read through kind of the tea leaves or some of the reporting that we have out there, both at Bloomberg and at some of our competitors, their eyes are kind of on a further out IPO. So it's not a 2024 window. We're looking, 25, 26, maybe 27 if you assume they want to get well past $1 billion in ARR. So the big thing is that when I talk to bankers and advisors, expectations are for 2025 to be the year that everyone thought 2024 would be. So it's not that they're going to file and try to get out in the fall. It will have more of a time for markets to heal overall and maybe some of those highly anticipated rate cuts to play out.
Yeah, you can really see how things have dropped off since the pandemic, and of course before the pandemic as well. I mean, there's the outlier year and then there's everything else, which just kind of pales in comparison. What are we anticipating in terms of big IPOs for the rest of this year? And I'm wondering if the political calendar might trip that up, because a lot of people anticipate volatility tied to the market, maybe a Federal Reserve rate cut or a series of them.
Well, the election makes it a little tighter. So I was talking to an advisor today who said if we really expected May and June to be better than they were. So July, we're going to have a busy week with Lineage, which will be the largest IPO of the year here in the U.S. Expectations for September, talk to bankers, they're more optimistic on those deals getting done. But the big question does get into how closely do you want to play it to the election? Does the market really kind of tighten up mid-October, and then you have a kind of narrow window in December when you're going between a later than normal Thanksgiving, which is November 28th, and you're trying to balance the December holidays. It does seem like some companies are altogether just focusing on 2025, which is not what we were expecting coming into the year. But when I talk to bankers and advisors, they do see some pleasant surprises. They won't say what those are, but that's something we've been seeing. But really, Scarlett, at the end of the day, it feels like we've been 3 months away from a reopening of the IPO market for about 2 years at this point.
Yes, I know. I feel like we have this conversation with you regularly. It's PE firms that do want to create a profitable exit for themselves that, you know, are kind of under pressure here, right?
Yeah, PE wants to get out the door. Traditional venture capitalists want to be able to monetize some of those assets. We'll be keeping our eyes this evening at KKR. Tech company OneStream will be pricing, so that'll be one that will kind of be a barometer of where tech sentiment is right now.
All right, looking ahead to that OneStream pricing then. Bailey Lipschultz, thank you so much. And I'm Scarlett Fu. That does it for Bloomberg Markets this afternoon. This is Bloomberg.